Okay, 24 May compulsory. Due dates for the second one in July. So it looks like there's no semester one and two, hey, this year. Looks like they're just going with one semester.
Yes.
So your exam will be at the end of the year, or
I have no
after,
idea.
or after this,
I
after June, after July. Because look, if you've got May and July, does that mean the exam is at the end of the year?
I think so.
Because they
I
say
really think so because
both
they are
semesters
only, I know they're doing
combined.
one semester. Yes, because I think they're going to be pushing the they're even going to be extending the registration dates.
Yes. Yeah, because some matrics
So it was
haven't. Yeah, some matrics got results late, and obviously because of the schools releasing marks and all of that. So it's quite
so
a.
that pushed it to the end of March, but there was also a problem with funding.
Yes, the NASFA stuff. Yeah, I mean even
Yeah,
Wits. There's strikes at Wits apparently.
so I don't even know when we're going to be writing
Yeah.
and what's happening.
Yeah. Well, the nice thing about what we're doing is obviously we're covering the content and I'm obviously recording it as well. So even if they do like really, really postpone it till late, at least you can always go back, worst case scenario. It's not the end of the world. Obviously, it would have been nice if they did have two semesters, then you could obviously write and complete, and then you could obviously do other subjects as well. So I guess it is going to kind of delay your studies as well because of only one semester being offered this year.
Yes.
But looking at the assignment, it looks the same to me actually. I looked at some of it, but I actually want to cover the assignment next week because after we've covered learning unit one, two, and then today's, which is three, we're actually ready to do the first assignment. So I'd prefer if we do the assignment after we've covered the units, at least the information is still relatively fresh and we can approach the assignment, we can discuss it, we can go through it. So that's the plan for next week. Next week, I want to obviously take you through the assignment to kind of revise, but at the same time, cover the assignment questions and answers. So at least you have a set of answers that you can use to obviously complete and submit your assignment when it's due. So yes, it's only due in May. That's a long time from now, but at least then we would have covered it, and then we can obviously focus on the rest. So because we've got time, even if the exam is postponed to the end of the year, then obviously we can even at a later stage, depending on you. I mean, I don't have a problem like moving some of the lessons late on. So, for example, we planned, I think it was 12 weeks in total. So we can obviously postpone some of it depending on what you would prefer. If you want to just cover all of it and then we've got it, or we can always keep those sessions and then host them later on in the year, depending on you. So we can always have that
I think
discussion
I would
later.
rather, yeah, but I think I would rather keep some of the sessions and use them later, solely because I'm also writing exams for flying.
Yes. Yeah, that's fine.
So I
That's not a
do,
problem.
so I am taking time away every week for our
Yes.
classes now.
Sure.
So I would rather that we like maybe we could finish the content and then all of the revision we can leave it
Yeah, that's fine.
till like before the exam.
That's not a problem. That we can definitely do. So yeah, maybe we can do that then. Cover all the theory, cover all the units. Once all that's done, at least you still have the videos as well. You can always go back and go over certain sections prior to the exam. And then once we know for sure when the exam is actually taking place, then we can just adapt the timetable to provide for lessons closer to the exam. That's not a problem. That we can do.
Okay.
Okay. All right. Awesome. But assignment wise, this I'm going to obviously cover with you at least. We're covering content as well as questions. Past papers and that we can leave for closer to the exam time, depending on how they're going to structure the year, the semester, because obviously things have changed slightly based on what we've got here. Okay. Is that all right?
Yes.
Okay, so for next week, if you can, try cover as much of those multiple choice questions as you possibly can. I think in total there's 30. Let's just double check. Or 15. Let's just have a look. Yeah, there's 30 actually. 30 multiple choice questions covering various topics that we've looked at so far. Okay, so I'll go through it with you in detail next week. We'll work through question by question, and then we'll discuss the workings and calculations as well. But it's always nice if you've had an opportunity to try some of it. At least then it helps in terms of practice, and you can see which sections you're good at, which sections you need to maybe focus a bit more on, and that will obviously help you from a preparation point of view. Okay, so that's something I'll look at with you next week. Next week will be assignment 1 week. We'll go through everything that we need to and obviously recap and revise some of the content from the first 3 units. Okay, so to get started with support material 3's content, we're looking at different types of taxpayers. In this section, in terms of the outcomes, we're going to be looking at different types of taxpayer. What is a taxpayer? Can you remember?
A person who pays tax.
And what or who could they be?
Natural or jurisdiction.
Yes, good. So almost everyone pays tax, and you have individuals paying tax and you have companies paying tax. So when you're looking at the different types of taxpayers, obviously depending on your characteristics, you might fall into a specific group, and that will require you to submit maybe more frequent returns because you might be seen as being a provisional taxpayer. Okay, provisional taxpayers have to pay tax more frequently, and they have to keep accounting records with SARS on a what do they call a semi-annual. Okay, so in other words, twice a year. Okay, so twice a year you would have to basically look at your tax affairs and decide on what your current situation looks like and what you expect your income to be, because that's obviously going to affect the calculation from a tax perspective, because SARS would obviously want to collect taxes sooner rather than later. So the sooner they collect taxes, the better, and that's what they're going to be looking at here in terms of characteristics. Okay, different types of taxpayers. Obviously, we need to know and apply the requirements for SBCs and micro businesses. So a taxpayer can even be classified as one of those 2 types of businesses. And there are benefits for being classified as a micro or a small business corporation. We need to know how to calculate tax liability. We looked at it last week when we did the week before actually, where we looked at a very basic example, looking at Mr. X, and we were looking at his taxable income and how the taxable income is calculated from the tax tables, and ultimately you're getting the tax liability. This is what you're going to be paying to SARS, okay, in terms of the amount that's owed. It could be a refund as well. If it's a refund, then obviously you're going to be getting something back from SARS. And then the last bit is just the first, second, and third provisional tax payments for a company. Okay, companies have to submit returns, and there are provisional tax payments that they need to provide for. Okay, on the next page, what are the 4 main types of business or forms of ownership? This we've looked at before. It's also covered in accounting, maybe operations as well, if you've covered those modules. Do you know what the 4 main forms of ownership are?
Sole proprietor, partnership, CC, and companies.
Good. Okay, do owners have a choice in terms of what tax they must pay?
No.
Okay, how do we know how much tax they have to pay?
According to the Act.
Yes, okay, so we need to follow those rules that are outlined by government. Obviously, SARS will administer those rules, and you've got to comply with SARS's requirements in terms of returns, information, etc. Okay, basically concluding every tax year by submitting a return and by wrapping up the tax year with SARS to make sure that the reconciliation is correct. What you have, what they have is correct, and everybody's happy with the assessment. Okay, remember the assessment is done after you've submitted your return, and then SARS will assess the situation and say, okay, well, you owe them or they owe you, depending on the situation. Is there a best form of ownership? Would you say one form of ownership is better than another?
No, I wouldn't. Okay, I would go with CC because of the limited liability, but other than that, I don't think so.
Okay, can you still register a CC today?
No, but you can purchase one.
Yes. Okay, so existing CCs continue, but they're actually treated like companies. So CCs still have to follow the Companies Act. They were basically incorporated under the Companies Act because in the past, people used to use and abuse that form of ownership because it had certain benefits. But now a lot of those benefits have changed because SARS is obviously want to clamp down on people using CCs. How can I say? I don't want to say fraudulently, but using it not in the best interest of the country. Okay, so obviously smaller businesses should benefit, and smaller businesses still benefit. So when we're looking at the best form of ownership, companies have limited liability. So you mentioned that will apply, but if I'm looking at tax, best is relative. It depends on the situation. So depending on what type of business you're running, it might be better to run a company than it would be to run a sole proprietor, or it might be better to have a partnership or a private company instead of a public company. It all depends. So there's no such thing as a best, let's say best, like one answer for this particular consideration. There's multiple forms of ownership, and they all have their pros and cons. Best is relative, and it would depend on the situation. So it would depend on, do you have lots of deductions that you're wanting to claim? Do you have lots of income? What's the limit? What's the amount of income? Is that income maybe earned regularly or not? There's a few things that we could consider that would help us to make a decision on which form of ownership would be the best. Okay, so obviously, best is relative. When we're looking at tax, you'll see that companies are actually, inverted commas, the best form of ownership because if you fall into certain categories, you're actually going to benefit, right? And that's where those SBCs and micro comes into it, because if you meet the requirements, those would be, inverted commas, one of the best forms of ownership from a tax perspective. Right? Obviously, do you want to pay more or less taxes as a taxpayer?
Less.
Yes, you would want to pay as less as possible, but obviously in line with the rules and regulations. So as long as you're not breaking any rules and you're meeting all your requirements, there's nothing wrong with paying less tax as long as it's in line with the rules than paying more tax. Right? And businesses need to balance that. So when looking at tax, if we're focusing specifically on a sole proprietor, okay, is a sole proprietor a legal entity? No. So
No.
what determines a separate legal entity? What is that benefit? Obviously, this isn't a benefit for a sole proprietor. So what is a separate legal entity? How would you explain that?
Okay, the way I would explain it is a separate legal entity is when your business stands on its own and me as the owner or the person as the owner stands on its own. So they're individuals.
Yes.
But
Okay.
when you're
So
not a separate legal entity, the
correct.
business is the owner, right?
Yes. So in this case, the business is the owner. The owner is the business. It's one and the same. Correct.
Yes.
All right. So you don't have separate, let's say, legal identity. So the individual is seen as the business and the business is seen as the individual. So there's no separate taxpayer here. So from a tax perspective, how would a sole proprietor be taxed? Proportional?
As a
Progressive? How are individuals taxed in South
progressive,
Africa?
progressive.
Yes, good. Okay, so progressive is the key here, and the owner owns the business, so the owner would have to declare and basically disclose all the information regarding the affairs of the company. But businesses have separate bank accounts. So obviously, if you're running a business, you're not going to have your personal bank account as the business's bank account. Right? Businesses need to keep that's separate because accountants keep it separate. Okay, an accountant is going to account for personal and business separate. Right, that's accounting. Right, with tax, it's still one individual. So one individual would have two accounts, one business and then one personal. Okay, but in terms of tax, SARS doesn't view this as two separate entities. It's one entity. Okay, so you might have a business account, you might have a bank account, but then SARS will look at both. Okay, because obviously the owner is the business. So if I'm looking at normal taxable income, right, in terms of the liability is going to be everything, all your personal and all your professional, basically, as the individual. Right, so if you're running a separate business as a sole proprietor, it's all going to form part of one return. Okay, it doesn't matter. You could even be employed as well, and then you have a separate business. Right, the point is, if it's a sole proprietor, there's no separate legal entity. Okay, so the business and the individual are one. From a tax perspective, it's one calculation. It's not two. Okay, everything is combined, personal and business, all combined, and then SARS will look at it from that perspective. All right, did you watch the budget end of Feb?
I did read it. I didn't
Okay,
watch it. I read it.
was there anything interesting that stood out for you?
Yes, the fact that we have to pay, uh, okay, well, our tax money pays for infrastructure for the N1, and we still have to pay 12 fees.
Oh, okay.
So I don't quite understand that. Why are we paying 12 fees if it's our tax money that's paying to fix the road?
Yeah, but that I think is a whole separate discussion regarding the
Conversation.
e-toll
Okay.
stuff. Yeah, the e-toll stuff and obviously the budget. So part of it is going to be from the actual fiscus, okay, so from National Treasury, and then obviously some of it is funded elsewhere. So tolls would be seen. I wouldn't necessarily call a toll a tax. It's not necessarily a tax. It's just a
It's
form
a
of
fee.
compensation for using a particular road. Obviously, there's a lot of politics in that behind it because we're living in Gauteng in Johannesburg, and obviously we know that some of our main highways now have tolls on them prior to before the tolls were established. There weren't any tolls on those roads. So that's a whole different issue. But yeah, I wouldn't confuse e-toll with tax. That's something completely different. So tax. So for example, even e-toll will have VAT on it. I don't know if you pay e-tolls or if you've ever paid it in the past, but all businesses that collect revenue, as long as they collect greater than 1 million, it's compulsory to register for VAT. So even Sanral, obviously they manage the e-toll system in Gauteng. Even Sanral would have to register as a VAT vendor, and they would have to collect VAT on those tolls. So if you've ever if you've ever received an invoice or anything like that from SARS or even from any of the other the tolls that you use. So if you, for example, obviously you flew down to Durban, but if you had to drive to Durban, you'd obviously have to go through a few tolls, and those tolls would have VAT on them. It would be a vatable supply. So if you're saying that, well, why do we have to pay tolls and still pay tax? They're actually two separate things. Tax is looking at collections in the country from different areas, and then obviously tolls would be more like a service, but a service for certain things. Okay, so um, I don't want to make it a debate about whether e-tolls is right or wrong or whatever, because that's politics and that's something completely different. But just to highlight the differences between a service and something that's public, so something that government is providing. So obviously, roads that are built that are government roads, okay, those roads generally don't have any tolls attached to them. Okay, roads that are produced sometimes even by private individuals, okay, or what do they call it? A consortium, where there's like a group of role players. Right. So, for example, I don't know, maybe obviously you went down to Durban. So, let's assume in one of the more, let's say, rural places, if we had to buy the land and if we had to build our own road on the land, then technically that's our road. We can do with it whatever we please. And that's kind of what you see in certain scenarios. So even in the country now, certain roads are still tolled because those roads have been tolled since like forever, and that's why you have those things. But obviously, some of it is government related, and some of it is obviously private. Yeah, but I mean, if it's private, it's something that you get to control. So I know we spoke about this previously. Would an individual build a road? Probably not. But there are very, very wealthy individuals. I don't know if you know Stain City.
Yes,
Okay, that's
yes,
a huge development and literally owned by one family. Okay, the
yeah.
obviously I don't know who it is, whoever Stain. I don't know what the name is, but Stain is like surname of the family. Obviously, very wealthy individuals, and they can afford to build their own inverted commas, like their own city, kind of. Okay, so the roads that they have in Stain City don't belong to the government. Those roads belong to the city, belong to the developers, belong to the. So, for example, even if you're staying in a let's say like a complex, okay, obviously the complex might have a road in it. Okay, that road would be managed not by government. So if there's a pothole on the road, government wouldn't fix that road. The body corporate would fix that road, or the developer would fix that road. All right. So roads can be privately owned. Roads can be created in any situation. We're talking about public infrastructure. So when you're looking at like infrastructure, so you spoke about infrastructure as one of the main key areas. So if we look at public transport, okay, all of that is part of government. So government actually owns that. Okay, it's a little bit different. I don't know if that makes sense. So obviously, e-tolls is actually, yes, it's part of government, but it's a separate body. Sanral is obviously the, how can I say, the custodians, okay, the people that manage that and take care of it and that. So yeah, there's a whole bunch of politics about that, but as I said, that's a whole other issue which we're not going to get into. Yeah, does that make sense? So a
The
toll
other
isn't a
thing,
tax.
yeah, that makes perfect sense. The only other thing that I think stood out would be that company tax is now 27%.
No, that didn't change. Where did you see that?
No, I
Company
swear I
tax?
read that.
Company tax is still the same. I don't recall reading anything about the change in company's tax. This is the PwC budget 2021-2022. So this is what all firms normally do. So I just took one from PwC because they're a very reputable, well-known audit firm, and obviously they have a tax division. So if you ever study like CA route, okay, you do the main areas is accounting, finance, okay, tax, and auditing. Those are the four main areas. And obviously in
Oh, wait,
PwC,
it does say. Wait, I
sorry.
did find it. It said the corporate income tax will be lowered to 27% for companies.
Let's see. We'll look at this and then we'll confirm it. It's possible. I'm not saying that you're wrong. I'm just saying I don't recall hearing that. Yeah, here's it. Company tax for 2021, it's still 28%.
Which one do I have? Okay, wait.
Okay, as far as I know, it didn't change. Yeah, that would have been huge news if that changed, because companies would have been
Mm,
like smiling, because obviously companies pay a significant amount of tax to SARS. If you look at this budget guide, this comes from Treasury. If you look at the breakdown here, corporate tax is 213 billion rand. Okay, obviously personal income tax, so people, individuals, we pay the most towards the country's revenue. Okay, the second biggest is VAT, and then obviously corporate tax. So if corporate tax had to go down by 1%, okay, you're going to lose out on like 20 billion.
can you please, I did email it to you. Can you just see if I got the right one?
Okay, did you email it to me? Let's see. When you
Yes.
say email, did you just send it now, hey?
Yes.
Okay, let me just refresh my inbox. Speech.pdf. Okay, where did you download
Yes.
the speech.pdf?
I think it was
Budget 2021,
I
National
can't
Treasury,
remember.
24 Feb. Okay, yeah, this is fine. Okay, what page are we looking at?
Okay, I think it's page, I know it's point number 7.
Page
So it's
47.
page 12,
Oh, page
I think.
20.
12, page 12. Yes. No, no, page 9 of 20. Wait,
Page
sorry.
9 of 20. Okay,
Yes.
here, page 9 of 20. Oh, okay. Notice, right after or commencing, let me just move this across so you can see it. Okay, the corporate income tax will be lowered to 27% for companies with years of assessment commencing on or after 1st of April 2022. That's the next tax year.
Oh,
Okay, so this is something that they're announcing in terms of ways to help growth going forward. Okay, but remember, this isn't legislation yet. Okay, this is
oh,
something that is a
okay.
proposal. It's a tax proposal. It's not law.
Okay.
Okay, so government is proposing
Okay.
to lower the income tax. Okay, government can propose anything unless it's law. It isn't how can I say it isn't binding yet until it's actually law. Okay, so
Okay.
government can propose all these things. Remember, proposals just say, well, they're thinking about doing this, they're thinking about doing that. Right. A lot of the
Okay.
time, it's done to try encourage the market to have a more positive outlook on the country. Okay, because if you tell users or if you tell the world, South Africa is thinking about lowering income tax, corporate income tax. Obviously, companies around the world will say, well, okay, South Africa is hopefully going to be a better destination for doing business in the future. Not now, but in the future. As it is, corporate tax is still 20%. Okay, but it's a
Okay.
proposal that government is considering.
Okay.
Okay, so
That makes
it's.
sense.
Sorry, say that again?
That makes sense.
Okay. Yeah, so remember, all of this stuff isn't law. It's just stuff that they're talking about, that they're considering. So let me give you another example. Do you know sugar tax?
Yes.
Okay,
Shopper.
Sugar tax was a proposal years ago. Okay, government spoke about it in one of the budgets, okay, in the past, but it never ever became law until more recently. Okay, when
Okay.
it becomes law, then it's set in stone, and then you've got to apply it, and then you'll find it here on the highlights. Yeah, so if you are going to be downloading information on the budget, you always need to find something that actually highlights the changes. So this is something that I always collect every year, and obviously I use it for my classes and stuff. And National Treasury puts together the highlights, and then in the highlights they talk about all the important changes. Okay, these are actual changes. These are things that will happen. These are things that will happen in the current tax year. So we're living in the current tax year. The new tax year starts on the 1st of March and it'll run all the way through to 28/29 Feb 2022. Okay, is that all right?
Yes.
Okay, and that's why once you've got the highlights, so the highlights is just nice because you can see the breakdown, and this is obviously from Treasury. And then obviously audit firms, okay, they have to monitor and manage and disclose all this information because remember, PwC, yes, they're an auditor, but they're not only an auditor. They also provide other services. One of their key areas is tax advisory. Okay, so you'll see all of those firms. If you go to their website, you'll see they offer different services. One of the services is this tax. Okay, but tax advisory. So advisory means they're specialists in tax because CAs cover tax as one of their subjects, and they're able to advise companies, individuals, whoever on tax compliance, on tax rules and laws. Right. So obviously, if you're a massive corporation, if you're one of the big companies in South Africa, you could possibly have PwC as a tax advisor, and you could ask them for advice in terms of strategy, in terms of reducing income tax for a corporate, okay, for a huge company, okay, because obviously if you've got a huge company, if PwC can reduce income tax by like 1%, if that company is making billions, the company could save millions in terms of rands on not having to pay more tax. Does that make sense?
Yes.
Okay, so these bodies, okay, these audit firms, these and PwC is not the only one. There's a few others. EY, Deloitte, KPMG. There are a few audit firms. The bigger ones. There's even smaller ones as well. But the point is that they have to advise clients. Okay, and their client could be a corporate, a huge multinational company, and they would have to advise those companies on how they should operate and what they should do going forward. Okay, so this is a proposal. So I'm glad that you're actually doing research. This is impressive. Okay, so this is the budget speech. This is actually what the guy said. Okay, this is what Tito Mboweni had read out during the plus minus 60 to 90 minutes of the speech. Okay, so you've actually downloaded the speech. This is what he has in front of him when he's busy delivering the budget. He's just reading this document out, basically, if that makes sense.
Yes.
Okay, so some of it is just spoken about and some of it is just proposed. Some of it is actually binding and it's changes to legislation. So, for example, this is law. Okay, beer is more expensive. Wine is more expensive. Sparkling wine is more expensive. Spirits, whiskey, tobacco, cigarettes, etc. Okay, all of these things are more expensive because that they change every year. That's sin taxes, okay, consumption tax. Obviously, South Africans have a problem. A lot of South Africans are alcoholics or excessive drinkers, okay, and that's even mentioned here. Excessive alcohol consumption can lead to negative social and health outcomes. Okay, it's a problem. Okay, and I'm sure you've even seen some of it with lockdown. Okay, and how people were craving their drink of choice. Okay, obviously government can't control that. I mean, everybody has a right to whatever they want to do. So if someone wants to drink their minds out and I don't know, ruin their life or whatever, it's their prerogative. But the point is, government can only do their best in managing, okay, certain things. Okay, so government always increases these things to try also limit the excessive consumption. Okay, so consumers do not react to price increases, and higher prices should lead to lower consumption. See? Okay, it's part of government. So government is kind of like the parent, like the mommy or daddy in a way. And obviously they need to try how can I say, lead or control the kids, the children. Right, and obviously the children would be the people in the country or the companies in the country. So they obviously put certain rules in place. Obviously, not all your children are going to be good. Some children are going to drink excessively. Some children aren't going to drink at all. But what can government do? They can try help limit it by increasing its prices because customers react to price increases. So hopefully by increasing the prices, they lower the consumption. Okay, so there's a lot to consider. I mean, that's a whole separate debate. Okay, whether you agree or whether you disagree. Some people will say, well, just because there's alcohol doesn't mean there's going to be negative social impact. Okay, some people drink responsibly, and that's fine. There's nothing wrong with that. But it's the excessive consumption that's the problem. And according to what the minister had said, government believes that excessive consumption of alcohol leads to negative social and health outcomes. Okay, drunk driving, accidents on the road, domestic abuse, all that stuff. Okay, so like I say, it's more social than anything else, but the tax part of it is financial. Okay, all right. So is that all right? Is that okay? Does that make sense?
Yes.
Okay, so yeah, so I'm glad that you actually found it. That's actually a really, really great resource of the actual speech. So if you read that whole speech, that's basically what he had delivered. when they delivered the speech in February. Okay. All right. So not to digress too much, I wanted to. Oh, that was what I wanted to show you. Okay. So the reason why I mentioned the budget is because I wanted to show you the new tax tables. Okay. Here, micro business SBC. Those ones are important, but not for this year. For the next tax year. And then where's the individuals? Here. Further up, I think. There we go. Taxable income for individuals. Okay, so notice they actually did give a little bit of relief. Okay, because when we looked at the previous one, okay, the one that I've sent you, but the one that I've sent you is used for the exams. Okay, they're not going to use this one for the exams. But you can see that government has changed those they call them those intervals. Okay, the sliding scales. Okay, these sliding scales have been pushed up by a little bit. Okay, before it was 1.5 million, 1.5 something million. Now it's 1.6. So now you can earn a little bit more and you'll be taxed a little bit less. But that's basically based on inflation. Okay, so they basically increase these amounts every year. Okay, so it's before. So the document that you have, the one that I've sent you for your current tax exam, okay, it's 1.5. You'll actually see it. It's 1.5 something. It's in the notes even. I don't know if it's in this set of notes. I don't think I've included it here. I might have. Yes, I did. There's it. Okay, it's on the next page. There. 1st March, okay, 2020 to 28 Feb 2021. Okay, so in terms of tax, last year's tax year, 1.577 million will be taxed at 45%. In other words, over and above that. Okay, if you look at the current scenario, okay, it's a bit more. Right, it's 1.6 now. So only if you earn over 1.6 now will you get taxed in excess of 1.6. So 45% in excess. Okay. Still okay, still making sense?
Yes.
All right, so just remember that you're using this tax year. Okay, so next year, the UNISA students in 2022, they'll be using the tax table that the governor, the minister had just announced. Okay, make sense?
Yes.
All right, how are partners taxed? Are they taxed as individuals or are they taxed as a partnership? This you should know from 1601.
No, is it? No, they. Oh wait, sure, but they're taxed as a partnership.
Ooh, no. Partnerships don't pay tax. When you did a partnership disclosure question in the statement of comprehensive income, you never had profit before tax and profit after tax because they're not a separate legal entity. Okay, a partnership isn't a separate legal entity. There's no unlimited, there is unlimited liability. There's no limited liability. There's no separate taxpayer. Okay, so A and B have to pay their own taxes. SARS will want them to submit a return individually. Does that make sense?
Yes.
Okay, and the same thing applies to a marriage. Okay, we use the analogy, okay, getting married. Okay, if you ever get married and you're in a relationship where you have two spouses, okay, each spouse would have to submit their own tax return. There's no marriage tax return. Okay, spouse A submits their own tax return, spouse B submits their own tax return. But if they're married and they're in community of property, okay, then they've got to show half-half. Half belongs to A and half belongs to B. All right, but they have to submit separate tax returns.
But what happens if like A has a bigger share in the partnership? Does he pay more tax?
Well, yes, because A would get more of the profit or more of the benefit. So if it's 60-40, then obviously on B's tax return, he'll only show 40%. On A's tax return, he'll show 60%.
Okay.
Yeah, so the split doesn't matter, but they need to submit separately.
Okay.
Okay, and that's the same with everything, any partnership. Okay, any partnership. It can be marriage, business, whatever. Okay, a partnership, no separate legal entity. Okay, so the partnership doesn't exist as a standalone. Okay, the partnership doesn't pay its own taxes. Is that all right?
Yes.
Okay, so each partner must declare their share, okay, of the profit or loss. All right, so A will do their own tax return, B will do their own tax return. The partnership is just the business that they're operating, that's all. Right, so how would a partner be taxed? Same as an individual. Okay, you would have to split. So your share, you will pay tax on it. The other person's share, they'll pay tax on it. Okay, so you might have one partner, maybe one partner does more work. Okay, and okay, when I say more work, they work for the partnership and they also work for someone else. Okay, they might be in a higher tax bracket. B might be here, A might be there. Okay, it's separate, it's individual. Each individual has to submit their own return. Okay, make sense?
Yes.
All right, so now we have something different. Closed corporations. Is a closed corporation a separate legal entity?
Yes.
So what does that mean?
The CC would pay tax.
Yes, okay. That means in the eyes of the law and as a taxpayer, they're seen as a juristic person. Okay, they have identity. Right, so a CC will transact with the customer. Okay, it wouldn't be the individual. Okay, if it was a sole proprietor, the individual would transact with the client. If it's a CC, the CC transacts with the client. And then all the employees work for the CC or all the members. Okay, does that make sense?
Yes.
Okay. CCs you've looked at in accounting as well. So you kind of have an idea of what it is. We looked at some of it there, but we're not looking at the tax. Well, we didn't look at the tax. Here we're looking at the tax. Okay, so CCs have to pay tax separately. Okay, and CCs will pay tax according to companies. Why? Because the legislation has changed. But NB, certain specific business classifications may apply. Okay, so when I say may apply, there are very strict requirements for an SBC and for a micro business. Right, you can be classified as an SBC or a micro, but you have to meet the specific requirements. If you don't meet the requirements, you're seen as a normal company. Okay, then you pay normal companies tax, 28%. Okay, we saw that. 28%, it's still 28%. Okay, yes, they might have proposed a possible change in the future, but until that actually happens, we need to wait and see. Okay, so when you go and you look at an SBC, I'm just going to use the new tax tables because this came out recently, so it's relevant information. Here, companies pay 28% tax. Okay, SBCs pay 0 up until 87,300 actually, and then after after 500,000, okay, so 550,000, then they're only going to start paying 28% like every other company. Okay, so notice, why does business, okay, have lower income tax rates for small businesses? Why do you think government would want to do that?
Maybe to encourage more people to start businesses.
Yes, and also to help small businesses. Does that make sense?
Yes.
Okay, because can you imagine having to pay 28% on 87,300? How much is that? Let's check. 87,300 times 28% is 24,000. Okay, so that means if you are running a normal company, not an SBC, okay, notice a normal company. If you are running a normal company, you would have to pay tax on the first rand. So 87,300 times 28% is 24,400. If you were a normal company, right, and you didn't meet the requirements of an SBC, okay, that makes a big difference. If you are an SBC, you would have paid 0. So you would still have 87,300 sitting in the bank. Okay, assuming it's all cash. Okay. If you're a normal company, well, then you're going to subtract that. So 87,300 minus this gives you 62,856. Okay, that 24,000 is a lot for a small business. Does that make sense?
Yes.
Okay, so depending on category, obviously, if this business is doing very well, if the SBC is still an SBC, but they've grown so much and they're now making more than 500,000, well, 550,000, so it's a lot more than 500,000, then they're going to be paying 28% because now government is saying, well, now you're not really small, even though you're still an SBC and you might meet all the requirements because of your turnover, because of your taxable income. Because you're earning so much, you have to pay the same tax as everyone else, okay, all the other companies. Okay, does that make sense?
Yes.
Okay, so that's something to consider. These are the rates that you're going to be using, okay, for your exams. So, companies tax, 28%. Small business corporations, okay, with years ending 1st April to 31st March, according to those scales, sliding scale. All right, and then turnover tax for micro business, same thing, sliding scale. Okay, so a sliding scale helps a business in terms of operations. Okay, you don't have to pay as much tax over to SARS. Are we okay with that?
Yes.
Great. Right, so what determines, in terms of companies and private, public and private, what determines the status of the company? Do you know?
Uh, the JSC, if the
Yes,
shares are listed on the JSC.
correct. Okay, public, listed on the JSE. Private, not listed. Right, so both are separate legal entities, both are separate taxpayers, both have to be taxed separately. Shareholders are separate from the business. Right, so the business will operate and the business will have to pay its own tax. Notice it's a flat rate. Okay, so large corporates, all corporates don't meet the requirements of SBC. Okay, because they're corporate, they're huge. Okay, so public companies, all of them pay 28% tax from the first rand that they earn. Okay, so 1 rand up until billions of rands, they're going to pay 28% tax on that. Okay, what's 28% of a billion? Do you know?
Oh, I have to go backwards. So it would be 280 million.
Yes. That's how much
Okay.
tax a corporate would pay, okay, on every billion that they would generate in terms of taxable income. Okay. It's a lot of money, hey?
Yep.
All right, but remember, we haven't got to the deductions yet. Right, just because they earn a billion doesn't mean they pay 280 million because deductions and allowances will reduce the income tax payable. Okay, and we're getting there.
Just a
Right,
question.
yeah?
Uh, when they speak about turnover tax, so do
Yes.
companies pay like a taxable income and turnover tax, or how does it work?
No. Yeah, that's a good question, and we'll look at it when we get to micro. Micro is micro on here? Yeah, micro's on here. It's coming up just now. Okay, but
Okay.
just to answer the question, but I need to go back to this page. Yeah, so the difference between turnover is actually sales.
Yes.
Okay, when we look at micro business, you'll see they talk about turnover tax because you only pay tax on your sales, so there's less admin. Because if you're paying tax on turnover, there's no deductions or allowances.
So does everybody pay on turnover
No,
or
not everybody, only micro businesses.
okay.
Okay, if it's any other business, small business, company, individual, it's always taxable income because taxable income takes all of those other things into consideration
The
deductions,
deductions.
capital
Okay.
gains, all of that. Okay, so
Okay.
only for micro do you use turnover, which is based on your sales, which is your revenue.
Okay.
Okay, so a micro business would be a business that doesn't have much expenses, very, very, very few deductions. Okay, then they would register as a micro business, and then they don't have to worry about admin. They can just pay tax. They can say, okay, well, this year I earned 335,000, I pay zero. Or this year I earned 750,000, I'm going to pay this plus any excess. That's all, but only on the turnover.
Okay.
Okay. All right, we're getting there. You'll see a few more notes on it. Just to complete this slide, we said government is going to be collecting tax from companies, and government will also collect tax from companies' payouts. So remember we spoke about profits?
Yes.
Okay, if a company makes a profit, this is from accounting. Okay, the profit can be distributed to the shareholder. Shareholders are going to have to pay dividends tax. Right, but does the shareholder pay it, or does the company manage it? The company manages it. It's a form of withholding tax. Okay, not quite the same as VAT, but similar. Okay, for example, do all of us pay VAT to SARS? No, the companies that we buy goods from, they pay the VAT on our behalf. Does that make sense?
Yes.
Yeah, so that's exactly what happens here as well. Okay, if a company declares a dividend, they pay you as the shareholder the dividend, but they pay it to you after they've deducted the tax. Okay, so any dividend that's paid to a shareholder is always after tax. Right, it's after tax in terms of the company being taxed, and it's after tax in terms of dividends tax, if dividends tax is applicable. Okay. Is that all right?
Yes.
Okay, there's the lists again for companies just to show you. So you can see CCs and companies, they use the exact same tables. The only problem is, do they fall into those categories? This category, every single company will fall into. Okay, but those ones at the bottom, if you meet the requirements, you can fall into that category. If you meet those requirements, then you can fall into that category. But if you don't meet either of those two, then you must pay 28%.
Okay.
Okay. All right, so Big's tax announcements, budget speech, obviously this is with reference to the UNISA study guide. Okay, so they've shown you the Income Tax Act, okay, and they show you how it's applied during the year. Right, so notice February is when they have the budget speech, okay. In around July, November, legislation is finalized, and then you have the budget speech for the next year. Okay, so remember you spoke about proposals in that document that you had downloaded?
Yes.
Okay, those proposals will be discussed up until that point when it's finalized. Okay, and then once it's finalized, then it's going to be reported on. Okay, so it's always done. Remember, there's Parliament. Parliament is there to vote on certain things. So even like the sugar tax.
Yes.
That had to go through Parliament and stuff to make sure it was legal. It wasn't against the law or anything like that, because everything has to follow the Constitution. Okay, even tax has to follow the Constitution. Our highest laws in the land is the Constitution, and no one is above the Constitution, because the Constitution is part of the Bill of Rights. Everyone has certain rights. So even when it comes to tax, okay, the tax rules and laws of the country need to still be in line with the Constitution, because you can't have laws that are unconstitutional. Then that wouldn't be fair. It wouldn't be just. Okay, does that make sense?
Yes.
Okay. All right, so do businesses like paying tax?
No.
No, they don't. Okay, so how can we avoid paying too much tax?
Expenses? More
Yes.
expenses?
Okay, expenses is one, or concessions is another. Okay, so when you look at special tax concessions mean, yes, you fall under this rule, but there's an exception to the rule. Okay, there can be certain exceptions, and those are often outlined by SARS in very, very specific practice notes. Okay, when you're looking at SBC, this is kind of like a form of concession. Okay, because remember we said, if we go back to this page, everybody, when I say everybody, I'm referring to companies. Okay, every company, every taxpayer, every juristic person as a company would have to pay 28%. but there could be, inverted commas, a concession if you meet specific requirements for an SBC or a micro business. Right, these concessions help certain types of businesses or certain sized businesses, depending on what you've got. Okay, so when looking at SBC, and this is just legislation, this comes out of the Income Tax Act. Okay, and SBC has a very, very specific definition. They define it very, very, very clearly in the actual act. Okay, and you need to follow all those requirements. Not in this set of notes, in the next set of notes. At the start of Study Unit 4, there's a table that I've given you, okay, that looks something like that. And then you've got SBC and you've got micro. And then it shows all the different criteria. You have to tick all the boxes. Once you've ticked all the boxes, then you meet the criteria of SBC, and then you can follow the legislation, i.e., the concession, the special concession for those types of businesses. Okay, this you don't have to know in detail. This is just additional information. The summary that you have in Study Unit 4 is what you'll be using. Okay, this is just additional, just to show you that all of this is part of the Companies Act. It's part of the legislation. It's part of tax. Okay, is that all right?
Yes.
Okay, sometimes these figures can be adjusted. Okay, so sometimes they can be increased or decreased depending on the situation. It's all outlined by government. Okay, all right, and then here's some more about the requirements for an SBC. Right, an SBC cannot, okay, in terms of investment income. See, investment income, any income in the form of dividends, royalty, rental, annuities, income, or similar nature. If you're earning investment income, you cannot be considered an SBC, because if you go back here, you'll see, where's the note here? Let me see if I can find it here. There's a note here about the investment income. Okay, all the capital gains of a company or closed corporation consists collectively of investment income and income from rendering of a personal service. Okay, not more than 20%. Right, so if you do earn more than 20%, greater than 20%, okay, sorry for you, SBC, not an option. Okay, if it's less than 20%, then you meet the criteria. If you don't meet the criteria, you cannot apply those tax tables. Okay, because those tax tables can make a big difference. Right, we spoke about it. Okay, well, we did a working with a different amount. Okay, I used the other tax table. I used this one, the new ones. All right, if I use the old ones, 83,100 times 28%. How much is that? $23,000. Okay, would 23,268 help a small business?
Yes.
It definitely will. Okay, so this is an amount that you would save, and then you're even going to save more. Have a look at this. Okay, 7%. So now you're not getting charged 28, you're getting charged 7. So that means there's a 21% differential. Okay, so exceeding 83,000, okay, 100. So on the next, what is the difference? 365,000 minus 83,100 gives me 281,900. This will only be taxed at 7%. Do you see that?
Yes.
Instead of 28%. So there's a 21% saving. Does that make sense?
Yes.
So times that by 21%, you're saving an extra 59,199. Right, would a small business want another 60,000 Rand?
Yes.
Yes, so notice in those two categories, you're already saving 59 plus 23. That's around, about 83K? Okay, which small business wouldn't mind having an extra 83,000 sitting around? Makes a big difference. That's someone's salary for a year. You can hire someone on that salary if you're an SBC. Are we okay with that? Does it make sense?
Yes.
Okay, so companies wouldn't have a choice. They would have to pay 28% tax on all their income from the first rand. SBCs have lots to gain. Okay, an extra 83,000 sitting in the business is really, really good. Even have a look at this. Now it even goes to 500,000, 550,000. Now you're only paying 21% instead of 28. So now you're saving an extra 7%. What is 7% on that differential? It's another few thousand, maybe another 20,000 odd, somewhere around there. Okay, so can you see how much benefit they give small businesses?
Yes.
Because they want to grow the country. And the country will grow with small businesses because small businesses become big businesses. And if government can help small businesses, eventually they become big businesses. And then they can start collecting 20% tax on a bigger base. Okay, because think about it. Okay, you're not, SARS isn't going to get rich collecting tax on 550,000 in terms of revenue. But what happens if you can grow that company to a 5 billion rand company? Collecting 28% on 5 billion is a lot better than collecting 28% on 500,000. Does that make sense?
Yes.
All right, so they want to encourage small businesses to grow. If those businesses grow and they become bigger and bigger and bigger, now we can start taxing them at 28%.
Okay.
Okay, so this is just the very, very specific legislation governing a small business corporation. The advantage is what we were just describing. Okay, here's the slide about it. Progressive tax table. Right, progressive tax tables for a company is unusual. It's special. That's why it's a special. It's not quite a concession. I'm just referring it to as a concession. A concession is just something nice to have. Okay, where it's an exception to the rule. Okay, the rule is 28% flat rates. But this is viewed like a concession because now you pay 0, 7, and 21 on the first 500,000 basically. And that's good for a small business. What small business wouldn't want an extra plus minus 100,000 sitting in the business? Makes a big difference for a small business. Are we okay?
Yes.
Okay, this is something that we're going to look at, but later on in one of your other topics. This is another benefit of having a small business. Being a small business is amazing because SBCs have all these benefits. They can claim accelerated wear and tear allowances. Okay, you don't know what a wear and tear allowance is yet. We'll only cover it later on when you look at deductions and allowances. Okay, so don't worry about it now, but when you get to that point later on, you can refer back to it and say, oh, yes, SBCs, lots and lots of benefits. Okay, businesses want to be SBCs. Okay, here's your note about micro. You asked me about turnover. This is applicable to companies and sole proprietors only. Okay, what is the biggest change for a small business? Not change. What is the biggest challenge for a small business? What is the biggest challenge? Do you know? No one likes doing it.
Tax returns, maybe?
Admin,
Or admin?
100%. Tax returns, documents, filing, all of that stuff. Okay, if you've ever done vacation work or part-time work or anything for a company, companies have huge commitments in terms of legislation, in terms of documents. They've got to document everything. They've got to submit tax returns for everything. And remember, a company might also be registered as a VAT vendor. So now not only do you have to register your income tax and you have to file that, you also have to file a VAT return maybe every month. Right, and that's a huge burden on companies. So what government has done in terms of micro business, they're saying, yes, they understand that a micro business is small. It might be a sole proprietor. Sole proprietors can be micro businesses, and then you only pay on your turnover. But you can't claim deductions. That's the problem. Okay, turnover focuses on sales. Okay, there's no deductions here. Right, so if you've got certain deductions, expenses, so if you're paying rent for an office, if you're buying stationery, if you're buying paper for the printer, etc., and you're running a business and there's lots of expenses, you can't claim any of that as a business expense. Okay, but again, you don't know deductions yet. We'll cover it when we get there. Okay, there's a disadvantage and an advantage. Micro businesses are only good for businesses that have lots and lots of revenue and very, very little expenses. In other words, no deductions. If they have lots of deductions and very little revenue, then you might as well just be a company and claim all the deductions. Okay, because there's a pro and con to it. Happy?
Yes.
Okay. All right, and then you've got a note here. The last few slides cover the calculation for interim payments. Does SARS want to collect tax sooner or later?
Sooner.
Definitely. Right, so SARS has interim payments that people have to comply with. Right, when I say people, I'm referring to taxpayers. Okay, so 1 March is the start, 31st August is 6 months down the line. Okay, there will be a first provisional tax payment. And the reason they do that is because they want tax sooner rather than later. And if you don't pay them the correct amount and there's a problem with your estimate, then they'll add on a penalty and they might even charge you interest as well, depending on what you did. Okay, so if you underestimated your tax, okay, because remember the company's operating. The company knows how much they've earned there for the first 6 months. They should have an idea of how much they're going to earn for the next 6 months. Okay, if they estimate wrong and it's understated, then there's a penalty that could be imposed. Okay, all right, that they don't really cover in too much detail. The textbook mentions it. Yeah, I think the study guide also mentions it, but it's not covered in too much detail. Right, but you do need to know how to calculate the payments. Okay, so estimate the taxable turnover times the rate, divide by 2. Right, the second payment, you estimate the tax, you minus the first payment, and that gives you the second. There can also be a third payment. Okay, that's not on here. Okay, that's on the next few slides, the provisional payments. Okay, trusts. What is a trust? Do you know what a trust is? Any idea what a trust is? Cheryl?
Uh, I know it's normally with the banks, but it's basically, can I say, an account that keeps money for people, lots of people.
Almost. A trust is actually it's like a company, but not quite. It's basically it's like an institution that's formed. Okay, it's a juristic person.
But
It's not a
it is formed
company,
with a
but
bank.
it's a form of I wouldn't want to call it a business. It's not quite a business, but it's an entity that's created, and in the eyes of the law, it's a standalone. So you get different types of trusts, okay, and those trusts are either created inter vivo, so during the life of an individual, or testamentary after they die. Okay, so those are two types of trust that you could get. So trust is just a special form of
Okay, wait, just
ownership.
one. Okay, can you hear me?
Okay, so a trust is just a special form of ownership, but a form of ownership for a specific purpose. Right, so you get different trusts. For example, the Nelson Mandela Children's Fund. Okay, that would be like a trust. All right, trusts are created for a specific purpose. Okay, you get family trusts. Okay, those trusts are operated and created for a specific purpose. All right, and those trusts will be taxed if they're a special trust, like an individual. If they're any other trust, then they'll be taxed according to 45%. Okay, so it's just another form of entity, basically.
Okay.
Okay. All right, other taxpayers, you obviously get farmers, mining companies, retirement funds. There are others as well. We're not going to look at them. Obviously, the scope is quite limited in this particular chapter, Study Unit 3. Provisional tax, we spoke about it earlier. This is just a more detailed working and calculation showing the actual steps. You need to calculate the basic amount. Earlier, we spoke about timing. Okay, 31st August is when you're going to make the first payment. In order to calculate that first payment, you need to estimate the basic amount, and then you need to calculate the normal tax. Divided by 2 gives you the provisional tax. Okay, all of these formulas we're going to be using when we look at calculations that have provisional income tax. Right, the second provisional income tax is calculation is also a formula where you're going to be applying a very, very specific criteria point. Right, if the taxable income is $1 million or less, okay, then it's the lower of the basic amount and the estimated taxable income. If it's more than $1 million, then it's the estimated taxable income. Okay, so all of this will be described. Okay, remember, it's an estimate. So sometimes SARS has a more accurate estimate, and then if they do, they can use that estimate to work out the tax. Okay, the first provisional or the second provisional. So as long as you're calculating the first and the second provisional using the correct basis, then you're in line with the law, and there won't be any penalties or fees or anything like that. Okay, and then the last bit is the third provisional tax payment. Right, and this will only happen if you've underestimated slightly and you've made a first and a second, but there might be an outstanding amount depending on the situation. If that does arise, because maybe sometimes companies can operate 6 months, and then while they're busy wrapping up their tax affairs, in the last, say, 2 months or 1 month, 1 or 2 months, okay, kind of like at the end of the tax year, you have a huge spike in the revenue, and that might have an under provision, okay, of your taxable income, and your taxable income is actually much higher than expected. Okay, if that's the case, you'll have a third provisional tax payment. All right, and that wraps up the content in Study Unit 3. That covers all the slides that we have in our notes. All right, so now that we've covered the theory, just to quickly look at the study guide to see what content they've provided you with here. Okay, there's the start of learning or Study Unit 3. Okay, different taxpayers, there's an introduction. We've looked at it, the outcomes we've looked at. Okay, this is quite important. So a lot of it I spoke to in terms of content, but it's always nice if you've got the textbook to try read through some of it, because that will just give you a little bit more depth, a bit more detail. And UNISA has identified a few separate units for you to focus on. Okay, they're obviously asking you to look at chapters 3 and 8. Okay, but don't read everything, because remember, the textbook will cover a lot more than what's required. So only read the paragraphs that they've outlined. So there's 2 paragraphs to read there from chapter 3, 2.1, 2.2. Then there's a few more there. There's a few more there, and then there's a few in chapter 8. Okay, so just stick to what they've given you, because the textbook will actually give you a lot more. Okay, the textbook is a lot more advanced. Right, UNISA will only test what's in their study guide. Okay, background we spoke about, those are the different types of businesses. Okay, then they've outlined sole proprietors, partnerships, CCs. Okay, we've covered this, companies. Okay, there's that diagram that we saw earlier in terms of the Income Tax Act, and when the budget is prepared, when the legislation is finalized, and in the next tax year. Let's see. Okay, here's the SBC. Okay, we spoke about the concessions. Okay, there's special tax concessions for SBCs. Okay, this is the actual rate of tax, and this is what we saw in the actual notes. Okay, this is the sliding scale. Okay, there's the 83,100. Okay, so they've even given that to you as well. Okay, this write-off that they're talking about, that you won't know yet. We'll only cover this when we look at capital allowances. Okay, so just wait a little bit. This point won't make any sense. You can read it, and you'll kind of know that this is a deduction. But the deductions allowance are only coming up much later on. And this is a capital allowance. Okay, there's an example here looking at the taxable income, okay, and applying the tax table to calculate it. So I did this example last week using an individual. Here we're using a small business corporation, looks like it. Okay, is this an SBC? Let's read it. No, this isn't an no, it is an SBC. Yeah.
Yes.
Okay, it is an SBC, small business corporation. All right, so you're using the tax table over there. So notice 19,700 and 33, okay? And then we need to add the excess. So what is the excess? The excess of
50,000?
28%. It'll be 58. Okay, then okay, I don't like the format here. The format's a bit strange. The format should look like this. Here. Okay, it's 58,583 plus the 28% above. Okay, so they've just written it the other way around. They wrote the 28% plus the 58. That's a bit weird. Okay, I'm used to these tables. Okay, these tables are better. Rather use this one. UNISA does give you a formula sheet, though. They should. In your exam, in the written exam before COVID, they used to give students a formula sheet, and then all of these tables were there. The tables look the same as this. Well, similar. It's also tax first, then the excess. Not like this. This is a bit different. Here they're doing the excess and then the tax. Okay, it's just a different way of writing it. All right, but that's what they've done there. Okay, there's the right method. See, there's the tax plus the excess. Do you see that?
Yes.
Okay. All right, so you can have a look at some of those examples. There'll probably be more. Okay, there's only one. All right, one example for the CC, Small Business Corporation. More reference to the textbook. Again, try look at those sections if you can, just to better familiarize yourself with the actual tax for a company. And then the micro business, that's specific for individuals. Okay, there's a really nice summary, which as I said, is in the next set of notes. We start with it before we move into the next section. I think they might even give you one here, but we'll check. Let's see. Okay, this is the prescribed textbook. They've given you an example here of the qualifying turnover. Okay, so qualifying turnover includes receipts only from carrying on business activities and does not include receipts of a capital nature. Do you see that?
Yes.
Okay, so sales to a debtor, disposal of equipment. Okay, those are two other forms of revenue, turnover. Do you agree?
Yes.
Okay, so they're saying that the qualifying turnover is 520,000. Okay, because it doesn't include receipts from carrying on business activities. Sales to a debtors, okay, that means I've already sold to them. Okay, when I sell to them, the turnover would have been recorded when you sell. Does that make sense?
Yes.
Okay, so you can't double account for the sale because I could have sold goods last month or the month before, and now I'm looking at this month. It's a bit different. Okay, so you don't include that. It includes receipts from carrying activities, receipts only from carrying on business activities. Notice, carrying on business activities, and it does not include receipts of a capital nature. Okay, so what's capital in nature? Disposal of equipment. That's a capital gain. CGT is covered in a different topic. Okay, that's one of your final topics. I think that's the number 7. Okay, so disposals of equipment is CGT, not part of turnover. Is that okay?
Yes.
Okay, the legislation is quite specific, and that's why please look at the textbook as well, because some of it might or might not have changed. It doesn't look like anything has changed. This is how they used to do it, and it's still the same. So I don't see any changes here in legislation. Okay, there is a note here. 50% of capital receipts is the proceeds from the sale of equipment used for mainly business purposes was added to the business turnover to get a taxable turnover. The capital receipts obtained from the sale of the primary residence were not added to the turnover as they were not mainly for business purposes and thus subject to capital gains tax. Okay, so if it's CGT, it's separate. If it's not CGT, then you would include 50%. Okay, but it needs to be for business purposes specifically, right? And they've referred to example 8.3.4. Okay, so please have a look at those examples because those examples do provide you with unique situations. Okay, let's see if there's anything else here. Summary of the persons who are disqualified. Okay, disqualified means they cannot register as a micro business. It's better to look at who can qualify because if you qualify, then you'll follow micro business turnover tax. Right? If you don't qualify, and remember, you have to meet all the requirements. I'll show it to you next week when we look at that little table in the next set of notes. Okay, there's a little table that should actually be in here. Let me see if I can find it. If it's not here, it'll be part of the additional questions. Okay, here they're giving you a note about first provisional, second provisional. Okay, that's based on the estimated turnover, which we said, divided by 2. Okay, and then you've got to subtract the interim. All right, so these are examples just highlighting what we had earlier. Trusts, farmers, that I've never seen them test. I've never seen them test trusts and farmers in any exam. But it might come up if it's multiple choice because they have changed the way that they're examining the subjects. Other taxpayers, also no prescribed tax. Collection from tax and entities. Okay, here's all the notes regarding the basic amount. Okay, this is quite important. Taxable income assessed by the commissioner preceding the year of assessment less the capital gain. The latest preceding year of assessment is deemed to be. Preceding year of assessment means the previous year. So the assessment relating to the preceding year, so last year when I submitted the return, or where a notice is issued more than 14 days from the date of the current provisional payment. Right, these are very, very specific requirements when looking at the basic amount. Okay, so I will refer back to this. Okay, I'll refer to the actual study guide when we look at questions where you have to determine the basic amount. If you have to determine the basic amount, then it's always going to be the last preceding tax year minus any gain. But if the latest tax year is deemed to be the preceding year of assessment or notice issued 14 days before the date at which the current provisional tax payment should be made, then you need to look at this, the assessment. When was it actually received and when is it going to be paid? Because the provisional tax payment must be made after that. Remember we saw 31st August, 6 months down the line. Okay, 6 months down the line, first provisional tax payment is made. So if the notice was issued before the date, then you've got to consider the timing. Okay, here they said the basic amount must be increased. Okay, that's only number 3, deemed to be followed as. Okay, so this would be the basic amount must be increased by 8% per annum if the date when the basic amount must be calculated is more than 18 months preceding the assessment. So this is when you have an outdated return. Okay, so you don't have the last year's. It'll generally always be the last year's year of assessment. So the last assessment for the year. Okay, so last year's assessment. This is only applicable when you have an outdated assessment, if it's greater than 18 months, if it's 18 months or more. Okay. All right, and then they've shown that to you in a diagram where they've shown you the dates regarding the 6 months. See, let me draw on this diagram to show you what I mean. Okay, so this is what we saw in that other picture. Okay, the first payment is applicable 31st August. Then the second payment is at the end of the year. Okay, we're looking at this basic amount. All right, so if you read what they said there, the basic amount is the taxable income assessed in the latest preceding year of assessment. So ideally, it would be from that year of assessment, 2019. If it's not from 2019, okay, and it's greater than, not greater than 18 months, no adjustment. Okay, if it's equal to 18 months, then you increase it by 8%. Okay, notice this is preceding, this is greater than 18 months. This is before 2012. Not 2012, 2020. Okay, so if it's 2020, then you've got to look at adding 8% for those years. All right, it's just an adjustment. It's to try get a figure that's the most recent amount so that you can use that figure here. Right, but as I said, most cases, okay, in every scenario, the basic amount will generally be the last year of assessment. Okay, because remember, you're submitting your tax returns every year. So you shouldn't have a situation where you've gone 18 months without submitting a return or getting an assessment, and that would be very suspect. Okay, why haven't you submitted an assessment in the last 18 months? Okay, and why hasn't it been assessed in the last 18 months? Right, it can happen, but it's not often the case. Okay, generally, it's just the last year of assessment. Right, so this is just for unique situations. If you have a situation where the basic amount needs to be determined. Okay, there is an example here explaining the 2018 year of assessment and how that would have to be times by 8% for 3 years to get an amount that will then form part of the basic amount. Right, so if you read this question, they've got a year end, March 2021. The first provisional tax payment is due in 30th of September 2020. Okay, the accountant is calculating the basic amount of the first payment. Okay, the 2020 year of assessment is not assessed. See, we don't have last year's assessment. 2019 assessment was assessed 20th of September 2020, and the taxable income was 400,000. Okay, when was this? This was 20 September. When is the payment due? 30th of September. Do you see that? So this is within the 14 days. That's what they're describing here. Okay, so if it's within the 14 days, go back to the textbook. Latest preceding year of assessment is deemed to be. Okay, where the notice was issued more than 14 days before the date at which the current provisional payment should be submitted to the commissioner. Right, this means that the assessment is received within 14 days before the first provisional tax payment should be made, and that the assessment can't be used for the calculation for the first provisional payment. See? Okay, so therefore the assessment received before this should be used in the calculation. All right, so I can't use that. I have to use 2018. Okay, so what is 2018? 320,000. So I'm taking 320,000, I'm adding the adjusted 8% for 3 years. Okay, right. It's not often the case because normally you will get assessed. This is in unique situations where you don't have record of submitting tax returns to SARS. Okay, and then SARS needs to look retrospectively to try to bring it up to date. Okay, if you're submitting your tax return every year, you're going to use the last year's assessment, obviously. Okay, does that make sense?
Yes.
Okay, so here's an example that we would refer to if you have a scenario where you need to go back. Okay, and you're looking at older assessments to estimate the first provisional tax payment because of the dates. Okay, the dates, I could see this was 10 days. Okay, you've got 30 September, 20 September, it's within 10 days, it's less than 14. Okay, and then they've given you those steps. Okay, I've given them to you in your notes as well. Same steps straight out of the textbook. Okay, there's another example here that they're asking you to have a look at, which is company only. And that's it. There's the wrap up. Are there additional questions? Okay, they are. That's good. All right, so here they have given you. Oh, I didn't actually ask at the beginning of this session. Last week, or the week before actually, I asked you to go through those textbook activities. Did you have any problems with any of the questions?
There was only one question.
Okay, which one?
Right. No, I didn't have a problem with them. I'm just confirmed that there was only one question for the activity.
Oh, okay. And was it fine? Did you manage it?
Yes, it was.
Okay, then that's perfect. That's good. Okay. All right, I'm going to ask you to do the same this week. If you can go through these examples. Question 3.1, how many have they given you? Okay, here they've given you a few more. They've given you 3. Okay, there's 3 in total.
Okay.
All right, have a look at them and see if you would be able to apply what we looked at in terms of those assessments. Okay, here's a nice one where you've got the 2020 and the 2019. Okay, and they're asking you about the first provisional tax payment. If I'm looking at the first provisional tax payment, I need to follow these steps. Okay, then I would write this down, I would write that down, and I would go through the steps. Determine the basic amount. Okay, I need to look at the basic amount. Then I need to look at the question, and I need to see, what do I have in the question? Do I have the last year's assessment? If I do, then I can use that as the basic amount. Okay, or if I have the estimated amount this year, I can use that figure. It all depends. Okay, it's not a SBC, so you wouldn't apply SBC to this scenario. So it would be flat 28% tax. Okay, notice no sliding scale. Right, so whatever the amount is, let me just show you here. Whatever the amount is, normal tax will just be the basic amount times 28%, no sliding scale. Okay, then you would divide that by 2 to get the first provisional tax payment. Okay. Do you think you'll be able to manage that?
Yes.
I mean, let's see what their solution looks like. Do they have solutions? They should. Where's it? Where's it? Where's it? Doesn't look like they have solutions. Maybe not in this document. It might be the next one. Okay, if it's not in this one, it might be in the next file. What's the next file? TAT103. It's probably in this one. Okay, let's see. If we go to the bottom, yes, there's it there. Okay, so in the next document, you'll see it. Oh, no, this is not right either. Solutions for 5, 6, and 7. So did they just not give you any answers for that one? That's odd. They should give you answers for each study unit. I'm surprised they didn't give you any for that one. That's strange. Okay, yeah, see, this is all 6.1. No, this is too far. It must be in this document then. Are the solutions here? This is 4. That's where it ends. Okay, that's odd. Did they not give you answers? Have you checked? Where did you check last week's ones? Did you have answers to check last week's ones with?
I did not check last week's one.
Because if I look at the self-assessments, it looks like they've left that out. Normally they include it. I mean, I can look at my older tax study guides and then I can maybe show you what the solution looks like. But yeah, it looks like here they haven't got it. Was there self-assessment here? No, not in chapter 1. In chapter 2 though. Yeah, here in chapter 2 there was one. Here, question 2.1. But now where's the solution? Now, okay, if I open up an old file, let me find an old file. Let's see. Here's an old file. This one is from 2018. Okay, so if I open up, it'll be, let me just check. Which one will it be? It'll be 102 again. Okay. All right, this is an old TUT letter from a previous year. Okay, this is chapter 3, hey? Okay, so we're looking at chapter 3. They definitely gave solutions before. I don't know why they don't give solutions now. That's very strange. Unless it's separate. Can you find out about that? Can you check the files that we've got and see where the solutions are? Because if I show you, here's an example. There's 3.1. Okay, but you can see this question's different to the one that you've got. Okay, they have updated the questions. The questions are different. This is an old question from 2018. Okay, but if you go to the back of the book, question 3.1, the solutions are here. There's the solutions. Where's 3.1? Here's 3.1. Okay, there's that table that I was referring to. Okay, this table I've given to you, but I've given it to you in the next set of notes. Okay, this table is perfect because you've got a tick, 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 tick. If you tick everything, then you qualify or you don't qualify. Right, this is the best way of doing it. Right, this is a really, really good. I even used this in some of my my discussions, the past papers and stuff. You just need to write down the requirements. If you can tick all of them, qualify. If you cross one of them, it doesn't qualify, and then you've got to use normal flat rates. Okay, see, the solutions are here. I don't know why your book doesn't have it. Can you find out about that?
Yes, I will. I think I'll probably email them.
Okay, but just look first. Maybe there's an upload on Unisa. Maybe my Unisa maybe they've uploaded it separately. Because it should have been part of this document, but it's not. This one is fine. This document is okay. Document 3. This is 103, I think. Yeah, this is TUT 103. Lesson 5, 6, and 7. If you go to the back, you've got the solutions. There's the solutions. That's fine. Okay, there. Solutions, self-assessment, 5 to 6, 5, 6, 7. But you don't have that in this document. I mean, this is the bottom. If I scroll all the way to the bottom, it ends there. It ends there. There's no solutions. That's bad. Okay, can you ask them about that or check online and see what they've given you? Maybe they've given you a separate document for the solutions.
Okay,
Otherwise,
I
you can't
will.
actually mark it. You can't actually check it. Was there anything else that you sent me? Let's see. I only have TUT 102 and TUT 101, but 101 is the assignment that I had open earlier. Is there anything in here? Let's go check at the bottom. Yeah, there's definitely nothing here. This is all assignments. Okay, yeah,
But
you're gonna have to
everything that
find out
I
about
did,
that. Sorry, what
because
is that?
I am on my Unisa and there's nothing more.
Oh,
There's
okay,
just
you're
the
gonna have to ask them about
letters.
that. Tell them you've looked at tutorial letter 102, this document, the one that we have here. Okay, this is TUT 102. In TUT 102, if you go to the bottom, the self-assessment answers are missing. Maybe you need to post it on the discussion forum. And then, I mean, if you have a document that looks like this, other students will also have the same thing. They need to give they need to give the workings for the answers as well, which they haven't. Okay, they've given questions but no answers.